Good morning, students. Now we will be doing one sum on straight line method of charging depreciation. First of all, you understand how to calculate depreciation under two scenarios. Under SLM, that is straight line method, or we can say it as fixed installment method or original cost method. The sum is like this. Asset purchased on 1/4/2015 rupees 20,000. Assuming the life of the asset is 10 years and the scrap value of the asset is 2,000. Let's calculate the depreciation under SLM. So let's understand how to calculate depreciation under SLM. Depreciation is cost of asset minus scrap value by useful life of the asset. In this sum, the cost of asset is 20,000. If there would have been any installation charges that would have added with the cost, then minus scrap value, that is 2000 given, and 10, that is the useful life of the asset in number of years, divided by 10. In number of years, this useful life of the asset will be. So 20,000 minus 2000, that is 18,000 by 10 is 1800 per year. The depreciation will be charged. Next, one more method of charging depreciation under SLM, FIM, or OCM is when the sum is given like this: asset value you have purchased on 1/1/15 at 20,000, rate of depreciation 10%. They have asked you to calculate the depreciation under SLM. Depreciation is cost of asset into rate by 100. That is 20,000 into 10%. That is depreciation is 2,000 to be charged on 31st to 15 because you have purchased the machine on 1/1/15. For 3 months also the amount of depreciation is 2,000. Next year again it will be 2,000 and next year 2,000 again. There is no per annum. That's why the time element is not required. As we see in the next sum, see in this sum, the 10% per annum is the depreciation given. 10% per annum, and we need to calculate depreciation. So 10% per annum, cost of asset into rate by 100 into time factor over here. This one will be into time factor. So into time factor into time. Time is you can say n by 12, number of months by 12, MPH divide by 12, divide by 12. That is how we will charge the depreciation over here. And this is how we will be charging depreciation month by 12. Depreciation 20,000 into 10 by 100 into 3 by 12, 3 months to complete 31st March. Depreciation is charged always on 31st March. Calculate depreciation under SLM. The closing date is 31st March only. If not mentioned, then also closing date will be 31st March. Closing date 31st March, 31st 3 of every year. Yes. Now this is the way we have charged the depreciation: 20,000 to 10 by 100 to 3 by 12 because January, February, March, 3 months. 500 is the depreciation coming. Depreciation is 2,000 to be charged on 31st 3/16. That is from next year onwards it will be 2,000 because the per annum word is mentioned. That's why we have to see the time period. Now we will do the journal entries. See, when you buy the asset, the journal entry is asset account debit to cash if you purchase and pay through cash. If you have purchased and paid through check, you have to write to bank. If you have not paid the money, then to vendor, it's in credit. Charge depreciation, depreciation account debit to asset account. Simply when there is no provision, nothing, simple depreciation is charged depreciation to asset. And to close this nominal account of depreciation in profit and loss account, so profit and loss account debit to depreciation. If you sell the asset, it will be cash account debit. Loss on sale of asset account debit to asset if there is a loss. For profit, you have to write like this: cash to asset, the entire value in which you have sold. Then asset to profit and loss. This is a profit, sale on profit. This is. We will understand this journal entries and the sum by doing a sum only. Let's understand by doing this sum. Rama Associates purchased a machine for rupees 50,000. Installation charge paid is 5,000. on 1/1/15. So they have purchased the machine on 1/1/15. Depreciation is charged under fixed installment method at the rate 10% every year, ending 31st March. He sold the machine on 31st 16 at book value. Pass the journal entries to show the machinery account, depreciation account for the year 2014-15 and 15-16. It's better practice in this chapter to do the workings first. So see, we have purchased the machinery 50,000 on 115, and the same date we paid the installation charges 5,000. The total value of machinery became 55,000. Depreciation is charged at 10%, not per annum. See, 10%. So 10% of 55,000 is 5,500, which is on 31st 2015. Year ending is always March. So our value of machinery on 1st April, the beginning of the year, is 49,500. Now next year again depreciation is charged on 31st 3, less depreciation, same depreciation because it is under straight line method. On the original value you have to charge the depreciation 10%, so 5,500 is the depreciation again. There is no second machine, so nothing to write in the second machine. Value of the asset becomes 49,500 minus 5,500, 44,000. And this value only you have sold the machine on the same date, 31st March 2016, you have sold the machine. So on this day you have sold the machine at the book value. Book value is nothing but 44,000. So you have sold the machine in book value 44,000. There is no loss, no profit. So our journal entry would have been, when I would have purchased the machinery to cash, depreciation is charged, so depreciation to machinery. Depreciation is charged again in the next year, so depreciation to machinery again. And when you have sold the machinery on the end of the year, end of the next year, then cash account debit to machinery. There is no profit, no loss, only cash account to machinery. No profit, no loss, no profit and loss account will come. Machinery account, when I am opening a ledger, when I purchased on 1/1/15 2 cash, machinery 2 cash 50,000, and again on 1/1/15 2 cash because of the installation charge 5,000. Total value of the machinery 55,000, depreciation charged. So by depreciation, this one, by depreciation, 5,500, and this is the balancing figure, students. You have to find out the balancing figure over here. You simply added this part 55,000 minus 5,500, it will be 49,500. 49,500 is your balancing figure. That you have to bring it down on 1/4/15, the next year's balancing figure. The beginning year is April, and the entire year's depreciation again 5,500, and again the balancing figure 44,000. But this balancing figure, you are selling the asset at this figure, at book value. So when you are selling, then cash account debit, so buy cash to machinery, no more the asset remains. In depreciation account, we have to write the first journal entry, depreciation to machinery. We have just posted it over here on the year ending, depreciation to machinery, and in the year ending only the closing entry, profit and loss account debit to depreciation. We have closed it. See, I have not shown this on the journal, perhaps I need to show it. So profit and loss account over here, and then again next year to machinery, that is depreciation to machinery, and again by profit and loss account, the closing of depreciation. And then this is our ledger of depreciation chapter, machinery and depreciation account we have shown. Acha, the journal entry, two more journal entries that I have not shown over here, that will be like this only. It will be, so students, see this journal entry is profit and loss account to depreciation, the closing journal entry on this date only, and over here also the closing journal entry, profit and loss account debit to depreciation. These two you must pass. And then when we have sold, cash to machinery. Now after this is the homework. Please do this homework. Mind it, over here per annum word is there, and you have sold it in profit or in loss, that you have to find out. Thank you, students. Thank you.